Hello, ORAT Nation. This is Dan Bird. It's Wednesday, February the 8th. And this is my midweek update. This is going to be a quick one. The market is not closed yet, but I have a concert to go to tonight. So I'm going to do this very quickly. Probably we'll go right into the close, so we'll see how it ends up. But just give you a quick update on how things are looking. As you probably know, Powell was testifying to Congress yesterday, and the market sold off pretty hard. Today he's also testifying, but I don't think today is going to be anything new. Mostly what he talked about yesterday is probably going to be repeated today. I haven't watched it today, but I did watch yesterday. Anyway, the market sold off as I expected that it would. As I mentioned last week, I thought it was going to sell off the first couple of days of this week, which so far it has. We'll see what happens from here. First thing that I want to do is, let me share my screen and First, I want to show you a mistake that was made. If anyone's interested in getting my newsletter that I put out every weekend, just send me an email to breakpointtrading@gmail.com, and I'd be happy to add you to the list. The thing that I wanted to show is this right here. This is from Stock Trader's Almanac, and we actually are the next day over, Wednesday. This is number 6, day number 6. But I had it in the one previously. I had the Fed rate hike on the 14th. Or I think it might have been on, the 14th, which is the 12th day, right in here. That's what it was in February. And since all the days in March are the same as February, it just duplicated over, and I didn't move it. I didn't change it. So that also goes for non-farm payrolls. Originally, I said that it was on the 3rd, which is what it was in February, but it's actually this Friday on the 10th. That's going to be a very important number that comes out. But the rate hike is on the 22nd, so keep that in mind. Next week, we have the inflation report on the 14th, and this weekend, I'll talk more about that and where I think that might be headed. So want to apologize for putting this into next week rather than the week after. So the rate hike, the Fed is going to have 2 important numbers to consider. First of all, the jobs number. If that comes in much hotter like it did last month, that's not going to be good. And then the inflation report, if that also comes in hotter, then you probably expect a 50 basis point hike on the 22nd. We'll talk about that more on Sunday. So let me go to here. We'll start with the VIX. Even though the market sold off, and right now it looks like things are starting to come back. So by the close today, we might be in positive territory. But it sold off pretty hard yesterday and sold off this morning. But look at the VIX. The VIX is still, it's in green. It's still, not really moving too much above 20. In fact, anything below 20 is bullish. So the VIX is signaling that the sell-off may be temporary. We'll see if that comes true, but the VIX is giving us some positive signals. You can see it's green right here. So we'll have to keep an eye on that. Down below is the 10-year Treasury. The Treasury started moving higher. I showed you the bullish chart last weekend on the 10-year Treasury. Started moving higher, and then it kind of backed off a little bit, and it's pretty much moving sideways right now. It's at 3.97, just below 4.04%. So that's important because it will affect growth stocks, technology stocks. If it moves much higher, they will suffer as a result. So let's go to the next one here. This is the S&P. And in this particular one, this is the 60-minute chart. So this is a very zoomed in view of the S&P. You can see here for yesterday, this is the big sell-off from yesterday. So it hit this trend line. I hope you can see that. It's a dotted line. Let me see if I can make this a little bit bigger for everybody. That might be a little better. So yesterday it sold off, and today it sold off a little bit, but then started moving sideways, and it's actually starting to come back right now. So again, this is a very zoomed in view. Here's the 10-year Treasury again. You can see the 4% is right there. It's right on that line right now. But The VIX, again, is moving lower. So it started moving up and moved sideways yesterday, started moving up a little bit yesterday with the sell-off, but now it's starting to pull back again. So that's a good sign. Maybe this sell-off is going to be temporary. However, we are at an inflection point in the market. So this is a daily view of the S&P, and the 200-day moving average is down here at this gray dotted line. I talked about this the week before last. I said the market probably would sell off down to the 200-day, and then we would hope to see a bounce from there, which it did last week. And then this week, as I expected, it would sell off in the beginning of the week, and then hopefully towards the rest of this week, and more importantly on Friday with that jobs number. Depending on how the jobs number comes in, it probably will be the inflection point or the catalyst for this market. Right now, we're hanging out right around the 50-day, the 21-day, the 8-day. All the moving averages are right in the same place. We're a little bit below those, but a little above the 200-day, and we're right in this symmetrical triangle. Symmetrical triangles are usually continuation patterns. Now, in this particular case, since the market has pretty much moved sideways for the last few months, we don't know which way it's going to go. But when it breaks out one way or the other, it will probably move pretty quickly. But with a triangle like this, you don't know which way it's going to head. So keep an eye on this. We're at a very important inflection point right now, right at the 200-day. If it drops through the 200-day, we'll look at this one. This is also a daily chart, but a longer view of it. You can see we're sort of in a downward channel that actually is a bullish flag. So you can see the two dotted lines right there. We're in this channel right now. The 200-day is not a little bit above the bottom of the channel. 3,900 is where the bottom is. And that is the support level from right back here. I can actually draw that in for you, maybe make it look a little more clear. So 3,900 is right here. Let's make this so there you go, 3,900, right about there. So you can see it hit it here, went below it here. It hit it back here as well. So that's a pretty important support level if we break through the 200-day. So the 200-day is at 3,940. So somewhere in that range, 3,900 to 3,940, we need to hold that. If we don't, the market could very quickly move back down, maybe even back to the lows from October at 3,500. So it's really important to try to hold this area between the 200 and the 3,900 area. But again, you can see the VIX at the bottom. The VIX has really been just moving around the 20 or below 20. Anytime it's below 20, that's usually bullish for the market. So we'll see what happens, but it's a really important time right now. It's important to keep an eye on this. This is a very long term. This is a weekly chart. This shows you the Fibonacci levels. You see the 50% Fibonacci is at 3,500. That's where we hit the low right there. The next one below where we are right now is at the 38.2 Fibonacci, which is around 3,800. So we've got a lot of congestion right in this area between 3,940 to 3,800. We need to hold that area. We really need to hold where we are right now. So I'm hoping that the rest of the week we're going to start seeing a bounce back higher. In fact, if we go back to this chart that I showed you earlier, you can see where we are right now is actually right here. So that's where we are right now. That is right at this low. So this goes back to 1950. Pre-election years 1950 to 2019, and then the 21 year from 2002 till now. You can see that according to Stock Traders Almanac, right at this area, right where we are today, that is the inflection point. Going back 50 years, 21 years for the solid lines, 50 years for the dotted lines, we were right at the inflection point. We're at the low. So if we follow history, this should be the low and we should start moving higher from here. We'll see what happens. Again, I think that non-farms payroll on Friday is going to be a really important number that comes in. Let me go back over here and talk for a second about Fibonacci. I saw a couple of comments on the YouTube channel asking what the Fibonacci levels are. What are they? If you go to Investopedia, and I recommend you use Investopedia for any questions you have about technical analysis or anything related to the market. So just look up what are Fibonacci retracements. This is retracements as it relates to the market. It explains how they're calculated. So you just add the number to the previous number and you get the next Fibonacci number. The retracements, the reason that they work is because most other traders look at these also. So they're looking at these levels and using them as support and resistance, just like in anything with technical trading. That's the reason it works, because everyone else is looking at the same thing. Fibonacci, though, can be found everywhere in nature. It's called the golden ratio. So you can find it in flowers. You can even find it in galaxies. This is the golden ratio. So this is the Fibonacci. These are all of those numbers. Just creates a spiral like that, called the golden spiral. Golden triangle is, you put a number 1 on one side, you get 1.618. That's one of the Fibonacci numbers that we use in trading. That will give you the golden ratio, and you can find it everywhere. You can find it in plants. You can find it in animals. Here's a seashell. You can find it in the perfect human face. Uses Fibonacci numbers. Even the Mona Lisa uses Fibonacci's, and Sacrament of the Last Supper from Dali. Dali was a big favorite of Fibonacci sequences. Here's the Great Pyramid, uses Fibonacci, and the Pantheon. So all of these things are found in nature. Fibonacci is found everywhere, and it's also found in trading. So that's why I show here the Fibonacci numbers. 38.2 is the next one down here at 3,800, and 4,100 is the next one higher. So you can see we went up to that right here. We hit it almost perfectly and started coming down again. So it's going to be really important to see how we end. You might have heard that bell. That's the market closing. So let's go look at how it closed. Looks like we have a spinning top doji right here. I've got this set for every 15 seconds it will refresh. So that's pretty much the close right there. That is a spinning top. That is a trend reversal signal. I talked about before about the shooting star candle that you can see up here at the top. Anytime I see a shooting star, that usually is a trend reversal to the downside. It's exactly what happened. When I see a spinning top like this right here, that usually indicates a indecision. So the market went up, the market went down, and it ended right in the middle. So that's indecision for traders for the market for the day. You can actually see the little candle right over here. So that normally is a trend reversal signal. So we'll see what happens tomorrow, but the 200-day is right down here. We would like to, bounce out of this area. We're getting close to the end. So something's going to happen here pretty soon. And I think Friday and next Tuesday, which I'll talk about more on Sunday, is going to be critical with those numbers for CPI and for inflation. So keep an eye on those. Finally, we'll take a look at, look at that. This is Vector Vest. These have been red all day long. You can see here March 8th. These across the top have been red all day. And this little gauge up here was pegged all the way to the left until right at the end. So we started coming back at the end, it looks like, which is a good sign. But it's firmly giving a down signal. It's a down for the trend, confirmed down. If we look at the graph for the DEW, which I showed you last week, and I said it was just about to give a sell signal, but it didn't give a sell signal. So it went above this middle white line right here, but we need two signals for it to give a buy signal, sorry. So here's the buy signal from back here. You can see it goes above the white line, and then the DPO, detrended price oscillator, goes above 0. That happened right here. So it gave a buy signal right there. And let me change this to the do. It gave a buy signal right there. And then it gave a sell signal when the opposite happened. When it went below this white line, this is the 30-day weighted moving average. So it goes below that white line, and then the DPO goes below 1. This went above the white line, but the DPO did not get above 0 right here. And I said at the time that if it does, it could only take one more day, one more positive day to put this above 0 and give us a buy signal, but it didn't happen. It went down instead. So we're still waiting for a buy signal here. It's still hanging on this trend line, barely hanging on that trend line. So again, it's really important to see what happens with this market the next couple of days. So hopefully that is a quick update on where we are. Keep an eye on things for tomorrow and Friday in particular. We need to see some positive action. It's actually is okay if it goes down a little bit more to 39.40, 39.50, where the 200-day is. It's also where this trend line is. It's okay if it goes down there as long as it bounces from there. And then we're at some point, you can see Friday is going to be right about in here. We're getting very close to a point where this is going to break out of this triangle one way or the other. And because it's symmetrical, we don't know which way it's going to go yet. So watch out for that. Anyway, that's my update for today. Have a great week trading. Be careful right now because the market is a little treacherous. It doesn't really know which way it wants to go. It could go down, and if it does, it'll go very quickly. If it breaks through these, it's going to go very quickly, get down to 3,800, I think. So just be careful of what happens. Could just as easily break out of the top as well. And that will depend, I think, on Friday and next Tuesday. Anyway, have a great week. That's it for today. I'll talk to you again with Zuber on Sunday. Let me show you, let me share my screen again. I'll show you my newsletter one last time. Just in case anybody wants to join, just send me an email to breakpointtrading@gmail.com. And if anyone ever wants to be taken off, just let me know. We had a couple of folks that subscribe let me know about that mistake on the Fed rate hike, and I moved it from the 14th to the 22nd. So thank you for that. That shows me people are paying attention. I appreciate it. Anyway, have a great week, and I'll talk to you Sunday. Take care.